How you doing, ladies and gentlemen? Welcome to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. We dove in here a little bit late today. We definitely had to get past our internet struggles for the day, but we still managed to get in here. So I really appreciate you guys coming to the show. What we've got going on for you today is our discuss about how the gold is going to be impacted by the most recent election. Before I get started, make sure you guys like and subscribe. Make sure that you guys join the membership. For the rest of you guys that are watching us from Twitch and Twitter, you guys have the opportunity to click the link. Make sure that you follow us on Twitch and Twitter. You can click the link, approve the mic, approve the camera, jump in and talk to us in real time. Outside of that, you guys can always comment in the comment section. Make sure that you remember that you have the ability to give us those special thanks and special emojis and throw some stuff at the podcast like Brickle Mode and give us those thank yous and what's ups so that we can keep doing what we do the way we do what we do and possibly be able to do what we do just a little bit better. Uh, So, as we get started, I want you guys to join me while I'm diving into the world of the gold prices and try to predict if the potential unrest in our most recent 2024 election will send these prices soaring. So, investors around the world are bracing themselves for what could be a very turbulent year. And we're going to be having a very tough time in the upcoming year in 2025. And what we're going to be dealing with is the results of the political unrest that casts a shadow over the global market, because regardless of which president gets in office, you typically have differences in economic policies, trade practices, and tariffs. And as a result, you end up having unforeseen changes in the transitions of the stock market and how certain assets are assessed. One of the assets that we're going to be dealing with is always at the forefront of investors' minds during times of uncertainty is gold. The other one is silver, and the other one after that is crypto. But political unrest in 2024 drove gold prices higher, and that's what we're trying to figure out. How high are they potentially going to go? One of the primary concerns surrounding political instability is economic uncertainty and what it creates. And when governments are forced to quell domestic unrest, this means that you guys are going to stop fighting with each other in order for everybody to be able to make a little bit of money. It's difficult for them to implement cohesive economic policies because the same way TikTok is warring with the United States, China and America are not getting along with the practices that China has with its users, and the U.S. Government has expectations that China doesn't feel like that they have to follow because they are not America. These issues lead to a lack of confidence in the market, and historically, gold has been the go-to safe haven asset during times of economical turmoil, which means that usually when more people start buying into a product, you have a higher demand, and with a higher demand, you have a higher supply, or not a higher supply, a higher price for the supply, because the quantity of gold does not increase. It's just the quantity of people that wants the gold. So we've seen time to time, whenever geopolitical tensions rise, investors flock to gold, driving up the prices. This uncertainty can also lead to the inflation, as I mentioned before. And as governments print more money to try to stimulate their economies, as well as knowing the known inflation is like a kryptonite to the money that they're printing, because while they're sending all of this extra money back into the economy to stimulate the economy doesn't save money, the economy wastes money. And since they're wasting money, you have more people willing to spend more money for high priced item, which allows the companies, the big businesses, to price higher for the same products in order to make more money, which inherently keeps the poor poorer and helps the rich get richer. The value of the paper currency decreases while the value of gold increases, making the attractive hedge against the inflation something that most investors try to go for. Furthermore, the political unrest can also lead to decrease in investor sentiment, causing a flight to safe haven assets. And gold is often the asset of choice during these times. Gold is not the only asset of choice, though. So it is not hard to see why gold has traditionally been seen as a store of value and sold. This is a solid foundation for investors to look for in wealth when they're trying to weather the storm. One of the funniest things about gold is that if you buy gold while gold is low and then you sell gold while gold is high, the same way you do with other stock markets, during this particular quantity of time while everybody's rushing to gold, this is the part where people who have held gold from when gold was cheaper would start putting their gold up for sale, where people would start buying that gold, and then you will start seeing the influx. So that's where you reap your reward. You don't get money off of the gold by buying into gold and leaving it there. You get the money from the difference from when you bought the gold versus when you sold the gold. Because unlike the variations in stock markets where dividends are paid out, gold is an asset that you purchase and keep, like you see in some of the mobster movies where you've got the bricks of gold in a safe. You could keep them and hold them for generations, and the value of gold, regardless of its fluctuations, will still be higher by the ounce if you take a brick and go somewhere and sell it. Versus the situations where if you're buying the stock value for gold, and then as gold prices go up, your stock value goes up, but when gold prices go down, your stock value goes down. Um, So when the stock prices start going up, once it starts reaching its peak, you start looking to put it up for sale so that when somebody buys it as it's going down, when it reaches its downturn, that's when you buy back in and hold on to the gold. And then you'll be able to buy more the second time around based on the difference between the value of it when you sold it versus the value of it when you buy back in. And then when it creeps back up a second time or third time or 20th time, depending on how long you've been doing this, that's when you start seeing the profits from buying gold, owning gold, and having gold as an asset. The whole time you hold the gold as an asset, you're actually backed by gold. Me personally, regardless of what the stock market looks like, I would probably make that the reputation of my company is to say that all transactions that I do are backed by gold. Because it's more prestigious than saying that it's backed by Bitcoin or backed by stocks. If it's backed by gold bricks in the safe, it's like, yeah, that guy's got money. Either way, as of late October 2024, gold prices have reached a peak of approximately $2,790 per ounce. As of early November of 2024, the silver prices, which is the other safe haven that people go to, has hovered around $32.65 per ounce. Not nearly as much as gold, but buying gold and buying silver, or the fluctuation between the two, where you sell gold for silver and then sell silver for gold, the way people bounce back and forth between uh, the Bitcoin and other cryptocurrencies, the Ethereum, I think that's how you pronounce it, as they bounce back and forth between the gold currencies. This showing a slight upward movement, reflecting a strong demand for both gold and silver as a safe haven asset amidst global geopolitical uncertainty and economic volatility. However, following the election results, gold prices have seen fluctuations, with recent dips attributed to market adjustments in response to political landscape. Likewise, the relationship between silver prices and the US dollar is critical. A weaker dollar typically supports higher silver prices, while rising interest rates can exert downward pressure on the precious metals that you're trying to purchase. So if political unrest leads to a decline in the dollar's value, it could enhance silver's attractiveness as well as gold's attractiveness, but it's going to give you more enhancement for the less wealthy individual to run and go grab silver at $32 an ounce versus trying to grab gold at $2,757 an ounce. When you think about the buy-in price, you're probably going to get a lot more silver for the buy-in price than what you would get for the gold. And then when the gold reduces in value, you can sell the silver and go buy the gold. That's why people buy silver and gold mines. You buy silver at $32 an ounce, and then when the silver raises up to $60 an ounce, you can sell it when gold drops itself back down to $1,000 an ounce, and then buy yourself some gold. Then go back and buy silver, and you can just keep doing that. Either way, one of the other opportunities that turns out to be what, even if it's an extremely volatile market, is Bitcoin. Following the election, Bitcoin surged at an all-time high of approximately $75,000, which is probably standard because Bitcoin will go up right after Halloween, and it did, and then it's going to start going back down right before Thanksgiving, which is about next week. So today's the 9th. I would say by the 15th or 16th, you'll start seeing that price start trickling back down again. And then it's going to go up one more time, not necessarily to meet that $75,000 mark, go right back down again right before Christmas. And then it should round itself back off somewhere between $60,000 and $65,000 is what I project that you should see Bitcoin at by the 1st of January. And then you're going to see it taper off to probably $40,000 or $50,000 by March or April of 2025. This is going to be reflecting the strong investor sentiment in the increased demand for cryptocurrency as a hedge against that same political uncertainty. This rally has been attributed to the expectations of favorable policies for the crypto industry, particularly because Donald Trump won the presidency. So the cryptocurrency market has historically reacted positively to political uncertainties as investors also often seek refuge in digital assets during these times of instability, in addition to investing into gold and silver. So political support for crypto, having both presidential candidates have expressed supports for the cryptocurrencies, but Trump's campaign had garnered significant backing for the crypto industry, has his administration expected to adopt more favorable regulated policies, which could encourage further investments in digital currency. So while Trump's proposal includes defending cryptocurrency rights and reducing government oversight, which could lead to increased market confidence, you're looking at what I've been telling you guys long before he said he was going to run for president, that Bitcoin is a viable option to add to your portfolio, in addition to getting into stocks and bonds and having cash stocks with dividend payouts and having mutualities and trust. You want to put some attention towards cryptocurrencies. The same way people were saying bottled water was going to be a thing, and now every household has 2 cases of bottled water in their house. The plastic bottle, each bottle makes somebody billions of dollars. And then the recycling plant that's recycling all that plastic is going to be making even more money. So you got to understand that Bitcoin wasn't really a thing that people paid attention to, but it is the most valuable cryptocurrency. And if you trade it right on the trade market, you can receive 80% on average returns. And that is the highest stock return that I have seen consistent in recent times. There are some that do a 300% return. There are some that do a 700% return, but those are short distance returns. The average of 80% return per year is pretty high expectations for any stock, when the average stock is usually doing about 15 or 20% returns, where when you're looking at 15 or 20% returns after inflation, you're looking at between 5 and 10% returns before taxes. Where if you're hitting 80% returns, where you're looking at 60% returns after inflation and after taxes, you're still getting a 40 or 50% return. You're still doing way better with cryptocurrency than what you would be having a nest egg of about 5 or 7% revenue received after you have paid off taxes and dealt with the conflicts of inflation. So the surge in Bitcoin prices has also been fueled by growing industrial interest. Because I keep telling you guys, we should probably pay attention to that. With over 50 billion in inflows into Bitcoin ETFs and significant investments from major financial industries, the crypto market is becoming increasingly mainstream. And this institutional backing can stabilize prices and attract more retail investors. A potential shift in regulatory attitudes following the election could significantly impact cryptocurrency prices if Trump wins, and he did win, implementing the pro crypto policy after he won. So once he implements the pro crypto policy, this is going to reduce regulatory ambiguity and encourage greater participation from institutional investors. Now, the market volatility is something that we have to understand, because when you're dealing with cryptocurrencies, political unrest often leads to increased volatility in an already highly volatile financial market. And this is going to include cryptocurrencies. So traders may react to news events and election outcomes with rapid buying or selling, contributing to price fluctuations. Because if a lot of people are buying in and a stock is starting to spike, a lot of people who know that this is going to dip real soon are going to start selling. Because in order for the value to increase, people have to sell and other people have to buy. So once you put your stocks up for sale and people start buying it out, you start reaping the rewards from when you held it at a lower value, but they start reaping the possession of the current crypto value. After a while, you're going to want some money. Some people are going to sell. Some people are going to take an L. Some people are going to hold. The people who sell are going to take a loss. Once it reaches, if they buy in when it reaches its peak, those people who sell are going to take a loss. Those people who who buy it and hold it, are going to wait for a change and not and accept the loss in the value of the stock until the value starts increasing above $75,000. Those that sell, and as they sell and take their losses, they may buy back in at a lower value and hopefully potentially regain a difference. But this is how the market is going to fluctuate. So the tight race between Kamala Harris and Donald Trump has created the environmental unrest, and historically, these periods of political unrest and uncertainty tend to drive investors towards all of these different markets, and the measure of protective political economy allows them to have more stability in an increasingly unstable environment. In the immediate aftermath of the election's results, you expect significant volatility in the silver prices and the gold prices, as well as the crypto prices. And the outcome of any subsequent developments will also have heightened impact on the volatility of these markets in a temporary fashion. In addition, the uncertainty surrounding the political unrest can lead to a decrease in business investments, and this is going to be impacts on stocks. And that is going to have companies become worried of making long-term commitments, and that is going to cause an unstable environment in the actual stock market. So this decrease in investments can lead to slower economic growth, further exacerbating the uncertainty and driving investors towards more stable products like gold and silver and cryptocurrency, because gold and silver are not impacted by whether or not business is good. Gold and silver is impacted by the value of the gold and the silver. Big businesses that might go out of business because they're not making enough money, they might have to downsize, they might have to deal with recalls, they might have to deal with a larger expense where shareholders are not receiving profits, that the trades between other countries may slow down productivity. The way Cybertruck was supposed to be doing 375 units a year, they are only, or either 3,075 or 375,000, somewhere in there. He was projecting that there was supposed to be a lot of turnout every year, and they're only putting out 6,000 because they can't keep up with the productivity demands because of delays in the development of the product. This reduces the value of profits from the companies, which reduces the shareholders' returns, which also reduces the shareholders' confidence in the product. And some shareholders back out while other shareholders stay for the long haul, because even though certain stocks have a depreciation of dividend returns to the shareholders at times of growth, those companies still have massive returns for the shareholders that stick in, and the budget balances itself out. Those shareholders have a massive return, which leads them to the ability to benefit from their profits the way uh, uh, the investments in Coca-Cola produced. So when we're looking at historical examples, we've seen the political unrest that has significant impacts on gold prices during the 1970s. When the US was experiencing high levels of inflation and political turmoil, gold prices skyrocketed, and more recently during Arab's spring in 2011, gold prices surged again as investors sought those safe havens. Current events are also hinting at similar trends, and the ongoing tension between major global powers, coupled with rising nationalism and protectionism, are creating an environment ripe for gold to thrive. And with 2024's election cycle likely to be a continuation of the influence on investors, investors are wisely taking a closer look at gold, silver, and Bitcoin as hedges against potential market volatility. Because Donald Trump won, we should see the increase inflationary pressures, and a Trump presidency is expected to create more inflationary pressures through policies such as higher tariffs and aggressive trade measures. So, this scenario would likely increase gold's appeal as a safe haven asset. It'll also allow individuals with less capital gains to put on gold to be able to invest in more effective means like silver and cryptocurrency, Bitcoin. And when it comes to geopolitical unrest, Trump's unpredictability with foreign policies could heighten geopolitical risks, further driving demand for gold, silver, and Bitcoin. Analysts predict that under such circumstances, the gold prices might surge as investors seek to protect their wealth. So, experts are also predicting that gold prices will rise in 2024, citing the ongoing geopolitical tension and economic uncertainty as key drivers. Some are even predicting a return to over $2,000 an ounce and leveling uh, uh, heights not seen since 2011. While these predictions are certainly eye-catching, it's worth noting that gold has traditionally been volatile assets along with silver and Bitcoin, prone to sudden price swings. And the expectation for short-term volatility as market reacts to the election results and initial policy announcements. One interesting insight that has emerged is the impact of central banks on gold. And that's going to be the IMFs that I was talking to you guys about earlier this week. It is no secret that central banks have been buying up gold reserves in recent years, and some experts believe this could drive up prices further. However, others argue that this could also lead to a decrease in prices as central banks could look to offload their gold reserves to prop up their economies. So, what do you think that we're going to be seeing with the relationship between political unrest and gold prices? I believe that it's going to be a complex one, driven by a multitude of factors. But one thing is clear: investors would do well to keep a close eye on gold in 2024 going into 2025, as the potential for market volatility is high. And what are you guys' opinions are in this particular topic? Do you see political events impacting gold prices in 2025 as high as we've been discussing, at looking like $2,500, seeing silver prices reaching over $100 an ounce? Or do you believe that gold is not going to be affected by Trump going into office because you believe that gold has always been stable under Trump's reign? Let me know in the comments below. Also, make sure that you throw some comments in after the show. And make sure that you check out some of the other videos that we've got set up about the stock market and financial changes that's going on this podcast, so that we can start talking about how to make money for us. And since we're already in the red team era, we need to be starting to think big business, act big business, and make big business moves with our financial status. So we should make sure that we are putting ourselves in a positive position for financial success, as opposed to holding ourselves down to a more stringent worker bee scenario. So I've got some great insight on how to diversify portfolios and protect the wealth. Do you guys have any advice or tips or tricks that you think might be relevant to promote your wealth in the current stock markets today? As we tiptoe around these topics, we look at I want you guys to make sure that you take the time to like and subscribe. I want you guys to make sure that you also remember to join the membership, and notate that we are definitely live 7 days a week, 9 Eastern, 8 Central, 5 Pacific. We started half hour late today since we were working on that internet situation. And I definitely want to talk to you guys about that internet situation. They reset everything. After they reset everything, we thought we were good, and then we had a few dozen upsets. Then we had to reboot the entire system, and then switch to incognito mode and drive towards our VPNs. I tell you what, this has been the most difficult time that we've had with internet service, but we managed to do a full live stream so far today with little to no hiccups that I have seen. And today we're actually operating in high definition. So hopefully we're not looking at any lag or still frames in the high definition. We're going to be reviewing that after the show. Keep in mind that because TikTok is no longer accessible for the American population, we're actually running heavy on Twitch, and we're going to be seen more often on Twitter as well. And we will be able to utilize Twitch, Twitter, and YouTube as our primary go-to channels in our political unrest. And we should see some improvements in the functionality of the podcast, because as the YouTube algorithm starts tapering off a little bit, since the political campaigns are going to start tapering off a little bit, we should start seeing a lot more traffic towards the smaller podcasts. So for those of you people that are small content creators, individuals that do this for a hobby, that does this for fun, that are trying to post your content in places and get yourself some a little bit of money, I strongly recommend that you keep doing it. But just remember that that while we're trying to stream, we got to remember that we're catering to a volatile market where we have community guidelines that we have to follow, and we have to make sure that we do the best that we can to not compromise those community guidelines. With that being said, it is a very interesting market that we've got coming up in 2024, and it's going to be one of the things that I'm going to find myself very entertained with as the podcast grows. I've noticed that I've had a lot of content creators reaching out, as well as brands that have been reaching out. So we've got us quite a few guests that's supposed to be coming onto the show in recent times. As we schedule that, you guys are going to start seeing a larger quantity of guests on the show, and you can feel free to join the show with them by clicking the link, approving the mic, and approving the camera. I understand since we're streaming from the shorts section of the For You page on YouTube, that the comment section is not right there in your face. So if you guys decide to go down and look below the live stream, you see in the comment section that there is, in fact, well, links that need to go back in there for those people who jumped in after the show started, because apparently when we threw the comments in there, they cycle through. So make note that you have the opportunity to go into the comment section and approve the mic, approve the camera. And then when you do so, you're able to be brought up onto the show if and when you are over the age of 18. Now, while you're on the show, you can make appropriate comments towards the topic, or we can redirect the topic to other similar topics, because we do straw man quite a few times during the show to talk about other things. As long as we are not redirecting ourselves to a politically conflictual topic or redirecting ourselves to something that is sensitive in nature, we want to make sure that we kind of stay on the appropriate side of things on a podcast. Now, keep in mind, we might be able to further exercise our freedom of speech in the members only podcast when we are exercising non-monetized variations of the platform. While we still have community guidelines restrictions to adhere to, we don't have as many because we're not getting paid to behave. So that's why I encourage you guys, in order for us to get a little bit more uncensored and unscripted, that we should put more effort into joining a membership and getting those premiums in, because that'll help us give you a more uncensored show here. I ask you guys, as you guys come in, what do you think about the way things have turned out since he has been elected? Not elected, he's the president-elect right now. So between now and January, Biden has given him the congratulations. It sounded a bit senile, but Biden has given him the congratulations. And, you know, Biden just has a couple extra things to do before he grabs his diaper and his oxygen tank, and he slowly strolls out of the White House. If he starts walking today, he'll be out of the office by February. If he starts heading for the door now, he'll be out of office by February. And then we'll have 4 more years of Trump. Now, with the current policies that the Republican Party is putting in office, I strongly believe that if we were to put our efforts into a Democratic position where whatever Democratic Party that gets in stands on the same position of giving everybody $1 million, I'm more than positive that the combination of the current red team's policies and that one policy would stabilize a lot of households and unstable a lot of others, because those people who are fiscally irresponsible will not save, but those people who are fiscally irresponsible will be able to invest. So you won't have a top 1%, you'll probably have a top 30% or a top 75% for the largest majority of people who know how to put their money in the right spot. But you will have a smaller poverty line because you will have more people that are in the middle class and upper middle class status and less people in the lower middle class status. But with nevertheless, looking at all of the taxes that is favoring business and high interest investments, I'm going to tell you, I'm leaning in the direction of high interest investments and business related trades, because I feel like since that's the direction that the company has gone into, instead of being a W-2 guy, you got to be your own boss. You got to find a way to build your own business and be your own boss. Once you find a way to build your own business and be your own boss, you just got to put the same effort into making yourself successful as you put into making yourself look good on your job to make your boss look financially successful. Because if we continue to try to stay as worker bees, we're going to get paid for our presence and never have a dollar over that. And they're not working towards paying us living wage, because really, modern day slavery, you work enough to live. Or, well, you get paid enough to live and you work enough to make them millions of dollars. And since inflation causes minimum wage to be 50% of your living wage, you have to work on 2 jobs or have 2 or 3 people live in the same house in order for you guys to be able to live in the United States, which ironically was foreshadowing from that series Three's Company back in the 70s and 80s, when they had the 2 girls and a guy sharing an apartment together because all 3 of them couldn't afford to live individually. That's what we're dealing with in modern times. So one of the things that a lot of real estate investors have been saying in recent times is for you guys to turn back and try to get multifamily units, because if you get multifamily units or property with multifamily zoning, you can rent out the room instead of renting out the house. And then you can have three tenants paying you 33% or 40% of the cost of the rent, where you could instead of having a $2,000 house, you could have $1,000 bedrooms. And in a 3-bedroom house, you're making $3,000 off of a $2,000 house. Matter of fact, if you're including utilities, you might be able to charge $1,500 a month per person for a room instead of paying $3,000 for the house, where you're still making almost double what you would have originally made, where even if one of the tenants can't afford to pay and you have to evict that tenant, you're still getting 2/3 the value of the house as you remove one of the tenants out of the house. So you have residual income coming in from real estate in a more expedited fashion, or a more consistent fashion than what you would if you were depending on your 9 to 5, where I've seen a couple buddies of mine that worked through COVID and got fired from hearsay. Well, he got fired because he said something on the phone that he shouldn't have said, but it's just a principle of the fact that the quantity of time that he spent on a job didn't give him any type of immunity from automatic termination. He got fired on the spot. They didn't even review the situation. They didn't even review the tape. They were just like, flag on the play, ejected. I was like, wow. And that's not the first time that happened. So every time my buddy comes and talks to me about how something bad, I'm like, I've been telling you to get the business off the ground. And if you got the business off the ground, you'd be more financially successful. And yet, and still, it's not happening. So, worker bees, we got to work. The rest of us, we're going to be successful. We're going to be able to turn the tides on our financial stability. We're going to be able to build us an era of wealth. And as we build ourselves an era of wealth, we'll be able to see ourselves in a more successful platform where we're not going to be dwelling on how to get by. So, I'm gonna I'm gonna be doing a lot more advice. I know that because we've got political unrest, we're going to be dealing with probably building a different every week. We should be trying to touch base on a different economy, and we're going to be looking at probably getting into each country and what they've got going on with their real estate, their stock market, their investment properties, and everything like that. Their assets that they've got going on. I know that China was number 2. We'll probably start by going into the number 3 economy. We'll go into BRICS, which is the third largest currency that's backed by 5 countries next to the euro. We'll be able to start talking about currency exchange and the values of currency and stuff to that effect. And we will be able to really get in there and start looking at how to piece together our success going forward in the future. So definitely note to self, we have to be able to put ourselves in a position where we can be financially successful. And note to self, we have to be able to put ourselves in a position where we're not struggling to get by. We got to be able to find ways to make money for ourselves. And we have to be able to make better financial decisions. So I've been talking to people along the way, and I've been encouraging people, instead of us wasting our money on entertainment, no matter how insignificant you feel that particular purchase might be, that, oh, it's fine, I can make that purchase. If you did without insignificant entertainment for a reasonable period of time, a lot of people say live monogamously, or not monogamously, live modestly. If you live modestly as you move forward, then you understand that you will be able to live lavishly later on, because the less money you waste, the more money you can invest. You're not trying to save by holding on to cash and not spending it. You want to save by taking the cash and investing into something where your money is paying you to be somewhere. That is the most important thing about saving. It's not just to put the money in your back pocket and say, I'm not going to spend it. It's not about taking the money and putting it under the mattress and saying, I'm not going to spend it, or putting it into a hole in the wall and saying, I'm not going to spend it. The important part about it is to put it where you can put it somewhere where nobody's going to take the money from you, and you'll be able to turn over financial profits from the existence of that money being in that location. That's what we're trying to overcome. So going forward into 2025, going forward into 2025, we're going to be trying to find a lot of other ways for us to make ourselves financially successful. And that's one of the things that I want you guys to high five about. And I know that we just got into the middle of November. I do believe that Little League, unless Brett's in the Nationals, his son's Little League is in the Nationals, I should be able to get Brett Owens to work out some times to swing over to the podcast and be able to start talking about his success rates and some of the things that he has done, which made him financially successful, because any dad that's able to spend time with his kids would be pretty good to have that free time because they're not bound by work. I know that I've had a couple buddies that's talked to me about, oh, you spend a lot of time at work, how do you have time to hang out with me? And I sit there and I think to myself, I'm trying to make money. I'm not trying to hang out. If you can hang out with me while I make money, then let's make money together. But if you can't hang out with me and make money with me, then by all means, go hang out with somebody else, because I'm not trying to hang out. I'm trying to make money. When I start making more money than I need, or when I start making more money than I want to achieve, then I can start saying, now it's the time for me to plateau, because eventually I'm going to want to be in a position where I'm not working every day to make a dollar. Because if I was to quit working today, 6 weeks from now, I would need money. That's not a good place to stop working. You want to work in a way where you have a residual income that exceeds your standard of living, where that residual income is all interest towards your principal, where you do not have to work. That is when you're able to put yourself in a position to say, okay, I can quit working now because my standard of living is covered by the interest off of my investments. So that is a residual income. People call it passive income, but it's not passive. You put decades into getting it this high. I was just talking to you guys about loans and bonds just the other day. And I'm going to be honest with you, when you start dealing with loans and bonds, if you put a lot of money into your loans and bonds, you're looking at putting a lot of money into the stock option. You're looking at putting a lot of money into the ability to make yourself financially successful. You're looking at putting a lot of money into the ability to give your children an inheritance that makes sense. Because once you have enough money in a certain location where the dividends coming from your investments is more than $5,000, and the standard of $5,000 per month, and the standard of living is less than that, it doesn't matter if you're living in the United States or if you're getting that money and you're living in another country. The fact is that if you've got a residual income coming in, and that money is being either ACH transferred or direct deposited into an account on a monthly basis, you spend what you know you have inside of that budget, and then you keep the rest. You don't have to use it. Or you could spend the maximum quantity of whatever it is, and then you still don't have to worry about it, because you know that you're going to get more money next month. And I don't see a lot of people really thinking about that when they are trying to set themselves up for success. So strongly advising you guys to go ahead and spin in that direction. The gold rush seems to be a very, very short topic today. So what I'm going to do is I'm going to put an early pin into it. We normally run for about an hour, but I've actually crossed over 4 topics already, and we're about 45 minutes in. So what I'm going to do is I'm going to go ahead and throw in the towel for tonight. We're going to end it about early, but usually we run about an hour. I want you guys to make sure that you like and subscribe and join the membership. I'm going to see you guys tomorrow night. But before I go, ladies, as long as the situation doesn't make sense, I'm going to keep asking y'all to make it make sense. So ladies, make it make sense. I'm your host, Xander, with this and that and everything in between.